Have you ever wondered why the US can run enormous debts without facing a financial crisis? Or how America manages to wield significant power over the global economy? This extraordinary advantage has a name: exorbitant privilege. It describes the unique advantages a country enjoys when its currency is the dominant global reserve currency. In this case, the US dollar. This privilege allows America to borrow cheaply, run large trade deficits without immediate crisis, and significantly influence international financial systems through mechanisms such as sanctions. But how did the dollar achieve this dominance? Well, after World War II, the Bretton Woods Agreement in 1944 established the dollar as the world's primary reserve currency, linked directly to gold. Even after the system ended in the early 1970s, the dollar maintained its dominance due to America's economic size and geopolitical strength. Another critical factor is what economists call the Mars hypothesis. This idea suggests that nations aligned with the US for security, such as Germany, Japan, and Saudi Arabia, hold disproportionately large amounts of dollars. Their security dependence on the US creates a geopolitical premium that solidifies the dollar's position globally. However, this dominance now faces multiple challenges. Recent policies under the Trump administration, such as aggressive tariffs and unpredictable trade wars, have caused instability and damaged international confidence in the dollar. Structural vulnerabilities like America's mounting national debt and heavy reliance on asset-driven economic growth also raise questions about the dollar's sustainability. At the same time, alternatives to the dollar are emerging rapidly. China is actively promoting the yuan by investing heavily in green technology and infrastructure. Additionally, cryptocurrencies and digital currencies are beginning to chip away at the dollar's dominance, especially in markets wary of US sanctions. Geopolitical events often boost the dollar's strength in the short term, as global crises lead investors to seek the safety of dollar assets. For example, during times of war or market panic, the dollar usually strengthens due to its perceived stability. Alternatively, these same geopolitical tensions can also accelerate long-term erosion of dollar dominance. Sanctions against countries like Russia have led many nations to seek alternatives, undermining global reliance on the dollar and prompting de-dollarization. Looking forward, there are three potential scenarios for the future of the dollar. Gradual erosion. The dollar slowly loses dominance over the next decade, declining from around 60% of global reserves today to about 50% by 2035, as other currencies and crypto assets gain prominence. Rapid decline scenario, triggered by persistent policy errors, aggressive tariffs, or financial mismanagement. The dollar faces a rapid decrease in its global reserve status in only a few years, dropping below 40% by 2030. This scenario would likely provoke a global economic shock. Managed transition. Through careful reforms, new alliances, and strategic investments in technology, the US manages to maintain a significant, though reduced, global role for the dollar, stabilizing at around 45 to 50% of global reserves. This can happen over a 10 to 15-year window. De-dollarization carries profound implications worldwide. For emerging economies, it could mean greater financial autonomy and less vulnerability to US monetary policy. For major powers like China and Europe, it offers increased geopolitical leverage through their currencies. For the US, it presents a challenge. The country might face higher borrowing costs, reduced global influence, and the need to reform its economic policies substantially. The dollar's exorbitant privilege has provided America with unmatched economic power for decades, but its future is far from guaranteed. As geopolitical tides shift and new financial realities emerge, we all need to prepare for a more multipolar world in finance.